What if I told you that in 2025, some of the world's biggest tech stocks didn't just survive, they grew even though the market was choppy? Today, we're breaking down the exact opening and closing prices for Meta, Apple, and Tesla in 2025, and what those moves mean for 2026. Let's start with Meta, ticker symbol META. On January 2nd, 2025, Meta opened at $589, hitting a low of $587 and a high of $604, before closing at $599. Fast forward to December 31st, 2025, the stock opened at $664 with a low of $659 and a high of $665, closing the year at $660. So Meta climbed from $599 to $660, a gain of about plus 10.2% for the year. Meta continued to leverage its massive advertising platform, driven by a strong user base across Facebook, Instagram, and WhatsApp. The company's big investments in AI and augmented reality also played a key role, with earnings generally beating expectations. Next up is Apple, ticker symbol AAPL. On January 2nd, 2025, Apple opened at $248, dipped to a low of $241, peaked at $249, and closed at $243. By December 31st, 2025, it opened at $273.06 with a low of $271 and a high of $273.68, ultimately closing at $271.86. From a $243 close to $271.86 at year's end, Apple gained roughly plus 11.8% in 2025. Apple's performance was supported by strong services revenue, steady iPhone sales, and continued growth in wearables and subscriptions. Even with pressure in some hardware categories, Apple kept delivering consistent earnings, which helped support its stock move higher. Now, let's talk Tesla, ticker symbol TSLA. On January 2nd, 2025, Tesla opened at $390 with a low of $373 and a high of $392, closing at $379. On December 31st, 2025, opening at $456, a low of $449.30, a high of $456, and closing at $449.72. Tesla climbed from $379 to $449.72, a gain of about plus 18.6% in 2025. Tesla's year was marked by continuing demand for EVs, expansion of production capacity, and strong earnings relative to expectations. Investors stayed interested in Tesla's potential in energy storage and autonomous driving tech too. To recap,